You want to be a full-time trader, but you have a job, you have school, you have commitment. You can't sit in front of the charts all day. In this video, I'm going to give you the full course on my 1-minute institutional scalping strategy, which is the exact strategy that allows me to find high probability trades in the first 2 hours of market open, so that you can get in, get out, and then get on with your day. This system isn't just some retail nonsense. This adapts the same institutional principles that my godfather used to move billions at Goldman Sachs, but on a 1-minute time frame for quick and consistent profits. I'm giving you the complete step-by-step framework, and then I'm going to show you multiple real trade examples so that you can understand why this is the most efficient way to trade. Finally, I'm going to show you how I took this exact strategy and turned it into a fully automated algorithm suite that does all the work for you, completely automated and hands-free. So how do we take a strategy designed for institutional timeframes and apply it to the 1-minute chart for scalping? The principle is exactly the same. We follow the money. But instead of looking at daily or weekly levels, we are looking at the microstructure of the market open and untested highs and lows and other key levels where price is likely to have a strong reaction. The entire strategy is built around 2 core concepts that my godfather taught me from his 30 years of working at Goldman Sachs. First, you need to know where the institutions are placing their money. This is where levels come in handy, right? What areas on the chart do you consider important? And second, you need a clear objective plan to trade around those levels. This is what price is actually going to do when it hits one of these levels, which allows you to take a trade. Let's break this down. The first thing we need to do is clear our charts of all of the retail nonsense. No RSI, no MACD, no lagging indicators. We are going to focus on the one thing that actually matters and actually moves price: liquidity. Specifically, the untested highs and lows of the London, Asia, and New York trading session, as well as the 8 to 8:15 a.m. Eastern Standard Time candle. These are levels where institutions have placed their orders and they act as magnets for price, meaning when price hits one of these levels, it's going to have a big reaction, which allows us to catch these good risk to reward trades. As you can see, I use an indicator that automatically marks out all of these levels for me. We have the New York Open right here, and then we have an untested high as well as an untested low. I use this indicator because this removes all of the guesswork. I am not subjectively drawing lines. I am objectively identifying where the institutional liquidity is resting. You can get this indicator for free in the description of this video. Just make sure that your time zone matches your TradingView settings. Now that we know where the major liquidity levels are, we need a roadmap for the morning, right? So what are we actually going to do when price hits these levels? This is exactly where the 8 to 8:15 a.m. Eastern Standard Time zone comes in handy. This is the final hour before the New York stock market opens, and it's where all of the institutional positioning happens. The big banks, the hedge funds, the institutions, they are all taking their orders during this 15-minute window. This 15-minute range is our roadmap for the day's direction. Most people get caught up in the volatility around 9:30 a.m. Eastern Standard Time, but using this zone, we are actually positioning for this volatility, so we are able to capitalize on this volatility, not get chopped around or not revenge trade on it. So now that I've told you all of our major liquidity levels and we have our roadmap for the morning, the first setup is the break and retest setup. This is the setup that you will see most often, and it's incredibly simple and incredibly reliable. All you do with this setup is you mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, and you do this on the 15-minute time frame. My indicator automatically marks this out for me, so you can see that we have this level right there. The next part, and this is super important, is you wait and you see which direction price is breaking out to, right when the market opens. So market opened at 9:30, price broke out to the downside, meaning we are going to take shorts when we get a retest of this zone. I'm going to go into market replay now so you guys can see exactly what I'm talking about. The key thing here is that although we are using the 15-minute time frame to mark out this level, it's very important to go down to the 5-minute and the 1-minute time frame to observe exactly how price is reacting to this midpoint. So just to refresh your mind on the break and retest setup, we mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time. We wait for 9:30, and we wait for a break either to the upside or to the downside. And then we wait for a retest, and the retest is where we take our entry, expecting price to move in the same direction that it broke out to initially. So in this case, we are looking for shorts on the retest, but if we broke out to the upside, we'd be looking for longs. Now I'm gonna go ahead and hit play just so you guys can see exactly how this would have played out in real time. I have not retested yet. We are about to get the retest. Just got the retest. Boom, our algorithm entered shorts right there, fully hands-free. And then boom, we hit take profit right there. When we are trading this setup, I like to have a stop loss of around 10 points, and I like to put my stop just above the zone in case we do get a liquidity grab, which happens sometimes. And I like to have my take profit at around 40 points, giving me a 1 to 4 risk to reward ratio. This next setup is what I like to call the sniper entry. This is one of my favorite setups because it's so precise and it gives you an incredible risk to reward with very minimal drawdown. This setup is simply taking a bounce trade off of an untested session low. These highs and lows almost act like magnets for price, meaning when price hits one of these levels, it's either going to continue moving down and hit the next magnet, or it's going to have a very big reaction and bounce up. It's almost like when you were a kid and you would put two magnets against each other and they'd go like this. That's how you have to think of these levels. These levels are so powerful because institutions know that retail is placing their stop losses slightly under these levels, so they like to sweep the stop losses, grab the liquidity, and then continue to push price either up or down. Here's a beautiful example of what I'm talking about. We have an untested New York low, price comes down, sweeps this low, takes out some of the stops, and then continues to move up and target this next high. I'm going to go into market replay real quick and show you guys exactly how you could have traded this setup. Right here is where our algorithm entered some longs. The key thing about entries with this setup is you want to go down to the 1 minute or the 5 minute time frame and observe that price is actually having a decent reaction off of these lows, right? If price is just falling straight through this low, probably a decent chance that it's going to continue falling. But if price is showing some strength on the smaller time frames, you can take a chance and you can say, okay, I'm assuming that price is going to continue to show strength. Right here, we entered longs with our stop loss at 10 points, and we actually are targeting around 50 points at this next high right here, giving us a 1-to-5 risk to reward ratio. Let's see how this trade does. Obviously, we already know it's going to win, and this is just for example's sake, but I'm going to show you guys what it would be like in a real-time market scenario. Trade hits, take profit. Boom. The beautiful thing about algorithms, guys, is that this trade was executed perfectly. We didn't just take profit at a 1-to-4 risk to reward ratio. We took profit right when price hit that next high, giving us a beautiful 1-to-5 risk to reward ratio, and we got out right before price reversed. Just being completely honest with you guys, if I was manually trading this, my execution would likely not have been this good. I probably would have caught a 1-to-3 risk to reward ratio, but the great thing about algorithms is I literally cannot mess it up if I try, right? I just plug this into my account and boom. This setup is simply a rejection off of an untested high. This is one of my favorite setups because it is so precise and it gives you incredible risk to rewards. All we're doing is identifying an untested session high, either from the New York session, London, or Asia. And then we are waiting for price to interact with this high, show weakness on the smaller time frames, and that's where we enter our shorts, expecting price to reject this high. For example, right here, we had an untested Asia high. Price was clearly failing to close above this high, so we entered shorts and we caught a beautiful 1-to-4 risk to reward ratio, catching this entire move down. There literally was no better entry. This was literally the best entry you could have possibly had for shorts on this day. There was no better trade. I cannot stress the importance of execution enough. A lot of you guys, you watch all of my videos, you know my strategy, but you still don't take the same trades because you're not good at executing. I'm going to go on market replay real quick and just show you guys exactly how you would have executed on this specific setup. All right, everyone, now we're on the 1 minute time frame. We're going to observe exactly how price is going to react off of this high. If price is showing weakness, meaning price is not able to cleanly break above this high, that's when we are interested in entering shorts. So right here, you can see that price is already rejecting a little bit. This is already a very clear sign that it's going to be a good time to enter short. So we're going to switch over to the 15-minute time frame and go ahead and take our entry. Boom, we just entered some shorts right there. We are targeting 40 points with a 10-point stop loss. Let's see what happens. Wonderful, take profit. Just made 40 points right there. That trade would have made us around $4,000. So why is this so effective? Because we are not predicting, we are not guessing, we are simply following the money. We are trading at the exact same levels that the institutions are trading at, and we are using their own positioning to our advantage instead of trying to trade against the institutions. Please think about it. Think about it. Why do most retail traders lose money? They're staring at the RSI, which just tells you what already happened. They're using MACD, which is a moving average of a moving average. It's literally 2 steps behind the market. They're drawing trend lines and support and resistance levels based on where they hope the market will go, not where the data shows the money is actually flowing. This is a game designed for you to lose, and the institutions know it. They know where you're placing your stops, they know you're chasing breakouts, and they use this predictable retail behavior to their advantage. So how do you win? You stop playing the retail game and you start playing the institutional game. You become the house. Instead of trying to trade against the house, you become the house. Now, as you all can see, this strategy is incredibly powerful. It's a real institutional grade framework that works. But I'm gonna be completely honest with you. Knowing the strategy is only half of the battle. Executing it perfectly, day in and day out, is a completely different challenge. Manual scalping on the 1 minute chart is one of the most psychologically demanding ways to trade. I'm saying this as somebody who has made a ton of money manually scalping. It requires intense, unwavering focus. If you blink, you miss the entry by a few ticks and the trade is gone. If you hesitate for a split second because of a previous loss, you miss a 1 to 5 winner. You get greedy and you hold a trade way too long and you watch a profitable trade turn into a loser right in front of your eyes. I traded this strategy manually for years. And while I was profitable, I was also a slave to the charts. I couldn't leave my desk for the first 2 hours of the day, and my mornings were filled with stress, anxiety, and the constant pressure to perform. I knew the strategy worked, but my own human flaws were holding me back from its true potential. I was the weakest link in my own trading, and you might be the weakest link in your own trading. I knew that there had to be a better way. What if I could take the exact rules of this strategy, the 8 a.m. zone, the untested session highs and lows, the midpoint retest, the 1 to 4 risk to reward, and turn it into a machine that would trade for me with perfect discipline 24/7 without any of my human flaws? So that's exactly what I did. I hired a team of quants, data scientists, and mathematicians, and we didn't just build one algorithm. We built a suite of 3 institutional-grade algorithms, each designed for specific purposes. Let me walk you through them. This is the algorithm that we've been using for the majority of the video. It uses the exact same strategy that we just went over. It scans the market 24/7, identifies the 8 a.m. zone, marks the session liquidity levels, and waits patiently for one of these 3 core setups to appear. It executes with millisecond precision, something humanly impossible to replicate. I'm going to show you all the beauty of algorithmic execution. So we entered this trade on Friday at 10:45 a.m. Eastern Standard Time. And usually I wouldn't feel comfortable entering a trade in the weekend, but this is an algorithm, so I trust it. On Sunday, when the market opens up, if you guys don't know, the market opens up. On Sunday, when the futures market opened up at around 7 p.m. Eastern Standard Time, we exited the trade for a 1 to 5 risk to reward ratio, literally starting our Sunday evening with profit, which is always really cool to see. I was actually with my family when this happened. I was sitting down, eating dinner, and I get a notification that we exited the trade, and I honestly kind of forgot that we were in a trade, so it was cool to see a nice $4,000 in profit while I was eating dinner. This was another trade that we held for a while. We entered it on Monday at 11 a.m. Eastern Standard Time, and we exited it at around 9 a.m. the next day, which is literally right when most people are getting up and looking at the market, and we already made our money, made our profit for the day. Now, for those of you looking to get funded, we built something special. This is our RP Liquidity Scalper bot. It's built on the same institutional principles, but it's optimized specifically for passing prop firm challenges like Apex and TopStep, Tradeify, or whatever you use. It's a high-frequency strategy that focuses on quick, consistent wins to meet the profit targets and stay within all of the drawdown limits. Here's how it works. It identifies simple, high-volume periods and executes rapid liquidity sweeps on the 1-minute chart, targeting a 1 to 2 risk-to-reward ratio. It's not about hitting crazy home runs. It's about hitting singles and doubles all day long to consistently build the equity curve with a high win rate. Enough talking, let me just show you a 5-year backtest over thousands of trades so you can see for yourself. This is the 5-year backtest over 3,453 trades. You can see that this starts at November 22, 2020, and it ends today, November 21, 2025. I can refresh my page. This is obviously a live. This bot has had a 79% win rate across 3,453 trades with a profit factor of 1.1. Real quick, I'm gonna show you guys the last couple trades that it's taken. You can see that we had a nice winner here. We had another nice winner, a few more nice wins, keep winning. And then we had one small loss, another great win, another great win, another great win, more wins, one small loss, more wins, small loss, and more wins. This is how profitable trading actually looks, guys. Now, if you look on the chart, you can see that this bot is focused on scalping. We took a small loss right here, and then we took a beautiful win right there off of that little demand zone right there, getting out. Then we took another nice little win, another nice little win, another nice little win. Keep in mind, these setups are from the trades that I just showed you in that list of trades thing. One thing I want to highlight for you guys is that this bot not only uses institutional grade strategic execution, it also uses institutional grade risk management. Whenever the market starts getting extremely volatile, the bot will avoid trading while still catching a really good move. You can see that we caught a nice short right here, and we completely avoided all of this choppy volatility, which probably would have caused us to take a loss. We waited until the market found its bottom again, and then we took some longs. I want to make this very clear. If you cannot look at a 5-year backtest of a strategy, you do not have a strategy. You are guessing. If you don't have at least 1,000 trades of data to look at, you are not a trader. You are just guessing on the chart. Finally, we have our institutional trend algorithm. This is not a scalping strategy. This is a system designed for the larger timeframes, the 1 hour, to spot major market imbalances and build long-term profitability. This algorithm analyzes order flow and volume profile to identify massive disparities between buying and selling pressure. When it spots an imbalance, it anticipates the market's reaction to correct it and enters a position to ride the resulting trend. Enough talking. As always, let's go straight to the backtest. This bot is up 1,000% over the last 5 years, which averages out to 17% month over month. That means that every single month, this bot is beating the S&P 500 by a few percentage points. That is insane. That means that every single month, this bot is beating the S&P 500's yearly returns in 30 days. That is insane. This has also only been running on a 100K account, right? So assuming you're using a 100K funded account, I'm not saying you're gonna have one-for-one results. Obviously, the market changes, but it would look something similar to this. That would average out to about $10,000 to $17,000 a month, and obviously that'll depend on how much you're paying your prop firm, whether you're getting an 80% payout or 90%, but that's the average. In a few minutes, I will do a live broker login into my $300,000 Apex account just to show you guys that this algorithm is actually executing day in and day out in my funded. Now I'm gonna go over some setups that this algorithm has taken. Right here, the algorithm detected that the order flow was shifting a little bit and price came below a key area of liquidity, so we entered some longs and we got out right there. We also caught some shorts up here and rode them down for about 500 points in profit. Caught some longs right here, exited the longs. Then right here, we took a small little loss, which obviously happens. Caught a bunch of nice shorts right here, some more nice shorts, another small loss. Another nice win. This algorithm takes a little bit less trades, but it catches higher risk to reward trades. And when it does take a trade, it catches a big multi-day move. For example, right here, we entered some longs, exited the longs, and then entered some more longs, and then exited right at the top of that trend. This is how you build an empire. As you can see, this isn't just one strategy. This is a complete ecosystem of institutional grade algorithms designed to make you money in any market condition. Now I'm going to do a live broker login showing you guys exactly how this algorithm has been making me money. Now we are inside my Apex account on Tradevate, and we're going to go to reports, and we're going to check out the report over the last week or so. And you guys can see that we have made 520 bucks and we have a 90% win rate. And yeah, that's exactly what I'm telling you guys. Like literally just showed you guys the trades, and now I'm showing you the trades inside of my account. Also, the reason it's only a few $100 is because I'm only trading one micro. I mainly trade these algorithms on my live account, which has a lot more money than these funded accounts. But I wanted to show you guys this because a lot of you all are using funded, so I just wanted to prove to you that yes, it does work, and it works great with a funded account. Alrighty, everybody, now we're going to switch over to my other Apex account, which is showing the other bot. Now on this account, in the last week or so, I have made $2,639 in profit. Keep in mind, this is all completely hands-free. I literally do not touch this account whatsoever. And keep in mind, just like the other account, this account is also only trading very, very small size. I just wanted to show you all that this algorithm does indeed work with fundeds, and you can see it's working really, really well with fundeds. Your own profit will obviously depend on how much risk you're taking on and how many contracts you're using. Most people with an account this size are trading with a few contracts, not just one. So instead of being 2,600, their profit will be, 5,000, maybe even 10 or 15. Same thing with the scalping strategy. Most people are not just trading one micro. So if you are tired of the manual trading headache, tired of being glued to your screen, and you are ready to start trading with a proven, profitable suite of systems that does the work for you, I have a special but time-sensitive opportunity. We are opening up a limited number of spots for our next onboarding cohort to get access to this exact suite of 3 algorithms. This is not for everyone. We are looking for serious individuals who are ready to stop guessing and start treating trading like a business. Because our onboarding process is so hands-on, we personally walk you through setting up each algorithm and configuring your risk parameters. We can only accept a small number of new members each month. The spots for this month's cohort are almost full, and once they are, we will be closing applications until the next quarter. And to make this an absolute no-brainer, we are offering a 100% money-back guarantee. If the algorithms do not perform for you, we will refund your entire investment. You literally have 0 risk. So to put it into perspective, you would actually have more risk if you continue to manually trade the way you are, which obviously is fine, it's your choice, but I'm just giving you a little thought exercise. Honestly, ask yourself, who do you think is better at executing trades flawlessly without any emotional interference? You or an AI machine learning algorithm? There's a reason why Goldman and big hedge funds are investing billions into this technology. So if you are ready to stop being the weakest link in your own trading and start leveraging the power of a full suite of institutional grade automation, click the link down below to apply. You'll be taken to a page where you will book a call with my team. We'll walk you through the entire system, show you more live results, and we'll see if it's a good fit for you. Just being completely honest, these spots will fill up extremely fast, so click the link now, and I look forward to speaking with you.